Hi there. Very good morning and a good afternoon to all of you, depending on wherever you're watching me. I'm live as promised around 11:30, and would love to talk to you about a number of points. One, stock, the markets, and also answer your queries. So a very good morning to all of you. I hope you can hear me and watch me clearly. Today's session will be based around consumer stock, a very interesting consumer stock that people are selling for the last few days. Today it is up, but has been selling for the last few days. Would also talk about the markets, how it is doing, and then answer your queries. So, three-part session for all of you. I hope all of you are doing well. Kindly stay safe. Uh, the festive season has begun, and probably next 1 month you have to be extra careful with respect to the pandemic and take care of yourself and your loved ones, especially the elders, very you can say deeply. uh, Try to not go to places where there is large gatherings, I would say that, because if this escalates in this month, then it will be shown in the December month, and you'll see the spike happening. So everyone has to take care of themselves, and then things would be fine in the winters as well here in India. Now, to talk about the markets, before I talk about the stock, and the stock I want to talk to you about is Britannia. But just to talk to you about the markets are slightly, I would say, tiring at around the 12,000, 12,050 levels. I would say at most it can go to 12,080 to 12,100. And it looks like there is a case of distribution taking place in the market. So, in my opinion, anybody who had taken long positions in March and are doing well and do not have a 2 year time horizon from today, that is 22 December, can take money off at the moment. Why I'm saying this is I believe, and this is just my opinion and nothing that you have to follow, but I believe that 22 will not be so great for the market. Some stocks will continue to do well, but overall for the market and overall for whatever is happening with the sectors, every sector, be it pharma, IT, FMCG, capital goods, infrastructure, banking, financials, anything you pick up, home improvement, and this and that, all these sectors will continue uh, to be sluggish in 22 because the pent up demand numbers would be out till March, and then FY22 will have decent numbers, but yet everything will be priced in. So what will happen? I think the ceiling is at 12,000. The floor is probably around 10,300 to 10,000. So we are at the higher end of the market. So at least for 15 months from today, the markets could stay in a range, and overall for everyone in the retail space, people might not make money, but yes, somebody who's invested into very good quality consumption names which are coming, or very good quality names in any sector which are coming at a slight discount, may continue to make money depending on how that sector does. So in on a holistic basis, anybody who has made good amount of money in the last 7 8 months since March can probably take money off around this time till Diwali. I see a good, either a good amount of correction or just consolidation for the next 3 to 6 months. But anyone who has a more than 2 year time horizon, say 4 5 6 years time horizon, these will be the opportunities. The next 6 months to 9 months would be the biggest opportunities to invest into very good quality consumer names, good quality IT and pharma names, because I believe IT and pharma would also correct slightly, probably 15 to 20%. The index would correct around 10 to 15%. Stocks may correct 20 to 30%, and people will get scared. So I have not seen people get scared because of the fall in the market. for the last 7 8 months. They got scared in February and March. I believe another bout of such sort of fall is possible that may not take the market to 8,000 but may take the market below 10,000 in the next 3 to 6 months. I don't know the reasons. The reasons could be anything, but currently the market is overbought on many fronts. Especially it is overbought in IT and pharma and chemicals. I see a lot of, you can say, greed in those sectors, and greed leads to a vertical fall in that particular arena. So be extremely careful while taking new positions. Yes, you have existing positions that are doing well and you're very clear about the company and company's roadmap for the next 3 5 years. Hold on to them, don't do anything. But if somebody has taken a trading position in March and is doing very well on them, and do not believe that the companies are going to do very well for the next couple of years, take position off. So that's my suggestion in that regard. Coming to the stock per se that I wanted to discuss with you, I wanted to discuss with you about Britannia. Now, Britannia came out with numbers and they missed the guidance by around 1.5 2% on revenue, and probably slightly more on the profitability front. And from 3,800 the stock fell to 3,300 now. And I keep saying this, the Patreon members got the thing earlier because they asked for it. They asked queries about Britannia when it started falling, and I gave my verdict right there and then to buy the stock on that fall. Now today the stock is up to 3%. I believe there is no doubt in my mind that these companies like DMart or Britannia or something like an Aisha Motors, something like an Asian Paints, Pidilite, HUL, Bata, these companies will keep on churning 15 20% earnings growth, even more, because of the lower base that we are having at the moment. Going forward, maybe not next year, but 2 years from now, and then continuously over 5 7 8 years. So what will happen is the discount for that earnings would be given in the next 6 months to a year. So what I mean to say is that maybe the results next quarter will also be bad. Maybe the stock of Britannia may go to 4,000 and then again correct to 3,400. But again, these will be opportunities to buy into these companies and hold on to them for 4 5 6 years. That would make you wealth. Now, everyone asks me, and a lot of people ask me, whether on a call or on Patreon or on YouTube, is why I don't give short term ideas a lot, why I am not into like trading and all that. Why I keep saying 3 4 5 years, because people do not have the patience to hold stocks for 3 to 5 years. What I could tell them is that in the stock market, continuously, consistently, you cannot make money unless you have a minimum of 3 year time frame. Yes, you can punt on something and make, you can say, a good amount on 1 or 2 or 3 trades, but then one trade will come here and there and will take all of your money out. And tell me, whoever is watching this live session and whoever will watch later on, have that not happened to you, that you have made money on 2 3 4 5 trades and you feel like, okay, everything is fine and I can make good amount of money on a monthly, on a quarterly basis, on 15-day basis, and then one trade comes and what, you lose everything. You lose 30 40 60% of your capital in that trade because you keep holding up that up. You might not be able to sell at stop loss. The stock might be on circuits, etc. It happened to me. I will I will make videos on my journey, from say 2011 October when I started investments, and would also let you know as to what all stocks that went wrong for me and how I learned that it is better to invest rather than trade, and even in those investments you can trade. So that is how things go. So you could have bought a Reliance at 1200, sold at 1800, bought Reliance again at 2000, and held on to it for about 3 4 years. uh, so that move from 1200 to 1800 was very swift when that news of Facebook deal came out. So that is how you also trade in very good quality large cap or good quality small cap names, which you feel can do well. You have to have conviction in buying something. You have to have conviction in getting into any company. You cannot just buy on a tip. You cannot just buy on any, you can say, news feed that the stock will go up 10-20% in the next 1 month, so let's buy it and we I will make money. That is not how markets work. If that was the way the markets were working, then people would have made a lot of money. So Britannia, in my opinion, is a buy at 3500, is a buy at 3300, is a buy at 3000 and 2800. I do not see personally stock go down below 2800. I do not see personally stock going beyond 36, 3700. It could be in a range, and these ranges are the main regions where one can buy these good quality stocks. The numbers of Britannia will improve 15 to 18 months going forward. Things will be much better. Yes, people might say that it was a work from home theme with people ordering cakes, biscuits, and other bakery products from Britannia. But it is not that the company is shutting down afterwards. In fact, Britannia did extremely well till February, and then the fall happened. So it was continuously making money when economy was opened up. And you have to consider one more thing, and this is extremely crucial in the case of FMCG, and why I like whether FMCG or food products or companies which are related to direct consumption. What happens is whenever economy turns around, people look at infrastructure, people look at capital goods, people look at housing sector, that economy is turning around. There are going to be more houses made and infrastructure will get a push and this and that. So let's buy those companies. What happens, and what happens directly and what you get impacted with, is high inflation. Tell me if that is not true, that if the economy goes to 5-6%, will the inflation go up or not? And when the inflation goes up, what happens? You buy a butter of any company, and that is of, say, 100 grams of butter is around 60 rupees. That just shoots up to 65 rupees. That's a straight 8% hike in the prices, and people do not realize it. People say only, oh, that it is up 5 rupees. So from 60 to 65, it is 5 rupees only for some people, but it is 8% for the company, although the prices of raw material, etc., would have gone up by 2 to 4%. So what the company makes is around 100% of the inflation that has risen. So the inflation has risen for the price to go up to 64 rupees for that butter. But the company has raised the prices from 60 to 60, say 65 or 68 rupees. So that 4 rupees hike has become an 8 rupee hike for that company. And that is where these companies like Nestle or Britannia or HUL or Bata, etc., make a lot of money, and without the consumers knowing about it. And you cannot do anything if you have uh, the best of the brand selling at those prices. People do end up buying it. So in Asian Paints, a bucket of paint may sell at 160 rupees today. 2 years hence, inflation goes up by, say, 15%. The rate of the bucket goes up to, say, something like 210 rupees. That's a hike of around 30%. And so it's making 100% gain even on the high inflationary prices. So you have to understand that these consumer names make a lot of money. So what Britannia would continue to do with is change in either the size of the packets, increase slightly the prices, have more operational efficiency, and the stock will continue to do well because the company would continue to do well. So my suggestion is, if you're uh, paying these companies a lot for the products, buy the stocks and make money on those, so that you it gets negated whatever you pay them. It's as simple as that. So that's why I'm pretty positive on consumption names. Britannia below 3500 is a very good opportunity to buy till 3000. Yes, the stock could still continue to either languish or just stay there, or may go down a bit, but then over 2-3 year time frame, it's a very good buy at these levels. All right, so I'm ready to answer your queries. I would like to request you that kindly support me through super chat and super stickers. It will help me a great deal to continue with the channel. I try to bring the best to you, with respect to research and analysis on stocks. Kindly support me through subscribing, through sharing my videos, as well as through super chat and super stickers. All right. EIH hotels is a buy or a hold. I would say hotel stocks, keep a 10-15% stock and take a punt on it. Probably take a call for 3 to 6 months and let's see how it does. But I won't buy a lot of hotel stocks now after the run up that has taken place. BPCL, divestment, overhang, etc. I would avoid BPCL at these prices. Yes, if you have 3, 5, 6 year view, you can buy, but I am feeling that these companies which is related to uh, government should be avoided, except for 2 or 3 companies. I don't like anything in this space. Yes, ITC is also a consumer stock, but ITC is into cigarettes. That's why I don't like it. And a cigarettes business will always have a overhang of government. Again, government intervention comes in, taxes comes in. When they demerge their consumer business, then I will look at it differently. But at the moment, it's an avoid. Yes, Airtel at around 400, very good levels. I would still believe that 700 to 800 possible in the next 2 to 3 years on the stock. It may go to 380, may even go to 320, 330, but it has come down a lot. Tata Consumer, in my opinion, was expensive at 500. I have been saying that for a number of months. Finally, it has corrected. I think it's going to go into consolidation zone for the next 6 months. Avoid it for the moment, but yes, you can accumulate for the next 6 months from a 3 to 5 year time frame. GMM Fodler around 3000, 3200 good levels to buy. I think it is still slightly expensive. I think there is a chance of a further 10-15% downside on the stock. Okay, Lakshmi Machine Works, very good company. Oracle Financials, another very good company. LMW Lakshmi Machine Works is in a space which is not doing well. That is into infrastructure, or sorry, that is into textile, and probably it would struggle. But Oracle, from a 8-10 year perspective, is a very good portfolio stock. Amber has run up. I would still believe if consolidation is happening in Dixon, Dixon is a better buy than Amber at these levels. HDFC is a good stock to buy in infrastructure space. This is one stock that I like, but HDFC Bank and HDFC Life are better plays in the HDFC domain. Pfizer on any declines is a buy, as is Abbott and Sanofi. So all these three, you can say, MNC pharmaceutical companies I like a lot. So kindly do have a look, but have a good 8-10 year view. These are all portfolio stocks. These are not stocks in which you're going to make a lot of money in the next 1 or 2 years. I still believe pharmaceuticals and IT may correct next year rather than go up. I've already talked about Britannia. Reverse the tape and you would know it. I'm positive on the stock. I will avoid no sell at these prices. A Reliance for 2 years, I think a good 30% upside is possible in the next couple of years, easily 30 to 40%. Uh, I think 2800 is possible in the next couple of years on Reliance. These are decent levels to buy. Below 2100, very good levels to buy Reliance. Info Edge, I believe 42, 4300 is possible. This is one stock that has already run up. So any major decline, 10 to 15%, yes, you can buy into an Info Edge. Somebody asked about Kelpes. So yes, lower and upper circuits continue on you can say a small cap or a micro cap company. So that is not the issue. What the issue is, what sort of a number Kelpes would come out with after the pandemic. So I believe 20 rupees of EPS is possible for FY22. On that basis, at around 400, it is still reasonably priced. I still believe between 650 to 700 is possible in the next couple of years on Kilpist. But have your stop losses in place for sure. I think Asian Paints, I cannot tell you a buy level. What I can tell you is buy some now, buy on any declines, buy on any up move, have 3 to 5 year view. I think it can double in 4 years. The way it produces numbers, I won't be surprised it would be 4,000 in 2024. I don't have a short term view on Asian Paints. All right. Aurobindo Pharma is not the favorite company, I would say, in the pharma space. It has a lot of volatility. At 780, it looks attractive. On declines, it looks attractive. But wait for a consistent, consolidated, complete decline in the pharma space, and then you get into it. Thanks a lot, Prashant, for your contribution. Valiant Organics, Sumitomo Advanced Enzymes, are they good for? I think Sumitomo and Advance is, I would avoid Valiant, but I need to tell you one thing, Prashant. I believe this space of chemicals, it is in a greed space. So be very careful. I feel that there could be a consolidated decline in all of chemicals very soon, and then people will be shaken off. It doesn't mean that the stocks will not go up in the long run, but you will get better prices. So keep that in mind. Advanced Enzyme and Sumitomo both are decent companies to buy into on major decline. So wait for that to get into them. Thank you for your contribution. Uh, I would avoid make money. I would completely avoid make money organics because of the past experiences and with whatever the management has done. Would avoid. The company doesn't make me confident for consistent returns in the chemical space. There are many chemical stocks that I like and I have already talked about. Thanks a lot, Ambaniti, for your contribution. KEI Industries, 3 years. Let me check the price. I can just tell you that at what levels you can buy. I still believe infrastructure and infrastructure ancillary could be an avoid rather than a buy from a 3 year perspective. I like pure consumption plays more. Uh, Probably what you can do is wait for decline on the stock. I don't see a major up move in the stock per se very quickly. It is on a declining trend at the moment. So what you need to do is probably have a look for levels closer to 260 or so, 260, 270 to buy into a KEI. All right. Himadri Chemicals complete avoid. See the you can say uh, the space of electric vehicles has taken a backseat at the moment. When it continues to do well, only then you get into such a stock. Even if it means getting into the stock probably uh, 20% higher, so avoid at the moment. Polycab again same as KEI. I would say avoid at these levels for sure. Thanks a lot, Rajesh, for your contribution. Any questions you can ask me. Thank you. Thanks a lot for your contribution. Uh, Both avoid Polycab, Havels, KEI, all. Why I'm saying this is they will do well only when economy will do well, only when housing sector will do well. Even if it means buying these stocks 20-25% higher, do that, but do not buy them at current levels. I would say that. Pidilite, I think it has run up. One of the best companies that I like, Pidilite and Asian Paints. You can buy at current levels, decline, have a good 4 year view. Again, a doubler in 4 year, in my opinion. Pidilite is even from say so 1250 to 1300 was the low. So I would say 2500 in the next 2 to 3 years. 3 years is possible. 2500 on Pidilite. All right. Tanla at current levels, I would say slightly expensive on a longer term time frame. Declines can be bought into camps. I have to look. I cannot comment at the moment. LNT a complete avoid with whatever is happening. I would avoid LNT. Motherson falling after deal with Bombardier. What your opinion? I think Motherson Sumi any level around 100 rupees is very good level to buy into. I would say go ahead and buy Motherson at 190 to 100 rupees. Have a good 3-4 year time frame. I think auto ancillary will recover once you will see a recovery in the auto space. I think 12 to 15 months, there will be a sharp recovery in this space. So if you have a good 3 year view, get into a Motherson Sumi for sure. This is my Patreon link. Kindly do subscribe to Patreon if you want to talk to me, if you want to have a discussion with me and have queries. You can ask me queries on a daily basis there with a $10 membership. So that's the Patreon link for you. Castrol complete avoid. It has been a laggard, a dog of a stock, I would say. Syngene, a good buy, decent buy at 5% decline from current levels would be very good levels around 500, 480 to buy into a Syngene. Bear crop again on any 10-12% decline is a very good buy. I think Bharat Rasayan has run up, may consolidate, but bear crop is a buy for me on major declines. Avoid AstraZeneca, that's my opinion. It has run up a lot. Talked about GMM already. Uh, Once again, I would like to request you to support me through Patreon, through uh, super chat and super stickers here. I would also like to thank all the patron members who have supported me all throughout these months, and it has been of great help to continue with the channel here on YouTube. Okay, Prashant, thanks a lot again for your contribution. These days, I am looking for good stocks which are at 50 DMA, or if there is a golden crossover, 50 crosses 200 DMA. Is this good strategy? I I won't say this is good strategy. Why I'm saying this is, Prashant, rather than trading with markets at 12,000, invest into companies and wait for 3 years. 3 year investment is a better strategy. You may think that I'm being very cynical, I'm being very conservative, I'm being very defensive. But when the market falls 10, 20%, then no amount of, you can say, technical analysis would help, and you would be stuck on positions, and then you will lose out on whatever you gain in trading. And I have learned that the hard way over the last 8 years. I would suggest that don't do that. What you do is invest and wait for your targets to be met, say 40% in 2 years or something like that. If that is met earlier, take out the positions. That would be the prudent strategy, Prashant. Thanks again for your contribution. Absolutely avoid IIFL securities. Complete avoid financials for me, except for one or two companies. HUL, any level below 2100, very good levels to buy. I still believe 3000 is possible on HUL inside 3 years, maybe 2.5 years or so. I think it is at very good levels. These prices and consolidating well. DMart, I have talked about in detail earlier. I believe DMart can be, you can say, bought currently, and on any declines, I still believe 2500 to 2700 possible in a year's time on DMart. Mahanagar Gas current levels very good to buy. It may go to 650 700. I'm not ruling that out. But overall, from a 3 years perspective, I won't be surprised if it will trade beyond 1500 in 3 years time. Sonata Software, again, decent levels. I think declines can be accumulated, but there are many other mid cap companies with a good Tata, Elxsi, etc. That are much better than, you would say, Sonata. Frontier Springs, very, very good company for long term. If you can have a good 6, 7 year time frame on the stock and on declines, you can buy, just accumulate and hold, should give you decent returns. I've talked about Kilpest. You can reverse the tape and see that. Uh, all right. So thanks a lot. Thank you for all your queries. Ashok Leyland is an avoid at current levels. Persistent is an avoid at current level. Tata Elxsi is a buy on declines. See, thank you for your contribution. I need to leave at this point of time. Would have a decent session on Sunday at 11:30 most probably. I try my best to help you all people. Yes, my, you can say, suggestions may go right or wrong, so that's part and parcel of the markets. What I can tell you is, do not trade into the market at 12,000. Anything can happen. If you have investments for 3 4 years, no problems, but if you are trading, then keep your stop losses strictly in place and get out on first warning. That would what I would say. Thank you.